Consulting firms have been in the news since the beginning of the year with everything happening with tariffs and public policy. And I went on Fox News to share a little bit about my insights about what's happening with tariffs and the economy at large. Take a listen.
All right, welcome back in Live Now. I'm Austin Westfall. All right, let's hit some economy news. Stocks rallying for the second day in a row as fears cooled over tariffs and Fed policy. This comes as U.S. officials continue working toward trade deals with some of the world's largest economies. Let's discuss what you need to know with Rae Le Roux. She's the CEO of Management Consulted. There's so much to talk about, so many different angles we can take every day with the economy headlines. Let's start off with this. This is a big one, too. Major stock indexes rallying for a second day straight today. People watching this, Rae, where is this positive sentiment in the markets coming from? We saw 4 negative days before this.
Austin, I think we have two factors for the positive sentiment right now. One is this friction between Jerome Powell and President Trump cooling off a little bit. The general sentiment is that lower rates would definitely boost the market, but not positively when we already have increasing prices, and especially prices that have pressure because of tariffs, and the combination of that could be really disastrous. So the cooling off of that is a big positive. You also have this potential deal on the table for China, and what isn't making the news in the same way but is super significant are some of the other smaller deals that are trickling in from other countries that are coming to the table on the tariff side as well. So I think you have this accumulation of positive sentiment that's really working in our favor.
Yeah, so we got to also talk about Fed Chair Jerome Powell as well. So Powell has obviously been in the headlines a lot. And earlier today, President Trump said that he might give Powell a call directly to press for an interest rate cut. So Rae, we know the market slumped when there was outward friction between Trump and Powell. Stocks have rallied since. But could a presidential call to push directly for rate cuts reignite those fears?
So the call, I don't think would reignite the fears. President Trump, of course, has a ton of sway. But the main issue here is whether or not we think that rate cuts are in the future or not. That's really what the market is pricing in. And rate cuts would happen more likely if Powell was out of the seat than if he was in it. So if the relationship is strong, we likely will see reasonable, strong, defended economic indicators that are choosing our interest rate future. If we don't, then we could see a trajectory that the market really doesn't want us to go on, which would lead us to those combination of higher prices and the stagflation situation that we don't want to get into.
Yeah, so tariff-wise, we continue to follow tariffs closely, too. It's a big topic. There's a lot of angles we can hit and a lot of directions we can go with this one. But what are you paying attention to tariff-wise this week? Some sort of trade deal with China or India would be pretty significant, correct?
It would, absolutely. So a trade deal with China would be one of the most significant pieces. Tariffs, of course, are taxing products that are coming into the U.S. A large portion of those are coming from China, much more than any other nation on earth. But also we have Trump made clear this economic policy differentiation where China is not considered a friend, other relationships are considered friendly, and he's treating that one differently by both raising tariffs and also looking for concessions. Both the size of what they do and also the relationship with China is in peril there. So backing off of tariffs does help consumer price index concerns. It does help price pressures, but we are seeing with the companies that we're working with, they're already beginning to reprice and rethink about their supply chains. Some of those price pressures won't go away despite a deal that could be on the table.
Yeah, so Treasury Secretary Scott Bessent is saying that there's an opportunity for a big deal with China to lower tariffs. That is, if Beijing is willing to take steps to rebalance its economy. I guess my question for you on that is, how likely is China to rebalance its economy for us? Do we have the leverage in that scenario?
The U.S. has a tremendous amount of leverage, but China has proven to be increasingly independent and antagonistic against us. So I think that what Secretary Bessent is saying is really positive. He's absolutely identifying the relationship that we have with China, the importance of it. He's also identifying how critical it is that they come to a deal with us. But I think what he's not necessarily saying is that it's actually really important for America that we come to a deal with China as well. Going down a pathway where we don't will lead to higher prices and risks inside the market. What I am really encouraged to see is that President Trump is using economic might, like in the deal with China, instead of military might. And I would always prefer to see that in foreign policy rather than seeing the combination of the two that would lead us potentially over a fiscal cliff. So I think we are in really good position. We have great leverage. The US economy is the largest buying economy in the world. We have strong employment numbers, and as long as people are employed, 70% of the US economy is a consumer economy. We're going to keep buying, and we're going to keep buying from China. So having that leverage on the table is really strong for us as well.
What other economic bellwethers are important to watch in the coming days, coming weeks?
I absolutely do watch the markets for the key economic indicator for me, which is right now the labor market. Like I just said, if we have employment in the market, everyone keeps the engine going. And when we stop having people in jobs, then they stop purchasing things and everything in our economy begins to slow down. We've seen since Trump took office, every sector improve in employment with the exception of one, which is the federal government. And I think that's a tremendous success so far of the administration. So we will continue to see really impressive economic indicators for that. We see it also in the private markets. So I track not just the public markets, but what's happening in the private markets, which is over 70% of the US economy. And the markets, the financial markets are not the economy, and the economy is not the financial markets. These private markets, which are largely led by the services economy, like consulting, law, accounting, et cetera, many of those sectors are hiring rapidly. So we look for jobs that are available. We look for pay per hour or pay per year for each one of those. And we see really strong indicators in those labor markets. So I think labor markets are really pointing to a favorable future despite the volatility that we see across the public markets.
Rae Le Roux is the CEO of Management Consulted. Thanks for the conversation. We'll talk soon.
I'm bullish on the future of America. I talked in my Fox News segment about how favorable I think the economy is and how employers are looking for great talent. So if you want a better job than the one that you have now, jump onto our job board, fill out a profile. It's free. If you're looking for amazing talent and you want to find them affordably, we're a great place to do that too. Just jump to the link in the description.